Hey everyone, and welcome to our Explainer. We're jumping right into a week that analysts are calling a massive turning point for the global economy. We've got central bank decisions, geopolitical tremors, and a truly historic policy shift all converging at the exact same time.
One of our key sources, financial analyst Cellcoin, puts it, well, pretty bluntly. This is not just another week of market noise. The stakes are incredibly high, and it feels like the entire financial world is just holding its breath for what happens next.
So, how do all these moving parts fit together? Here's the plan. First, we're going to map out the global chessboard. Then, we'll zoom in on the Fed's big decision and a historic shift happening in Japan. After that, we'll follow the money into gold and silver. And finally, we'll connect all the dots to figure out what all this volatility really means.
All right, so we're looking at a global economy that's at a really fragile crossroads. It's not just one thing going wrong. It's a whole bunch of powerful forces all coming to a head this week, creating what a lot of people are calling a perfect storm.
Now, what's so fascinating here is that these aren't separate problems. They're all feeding into each other. You've got geopolitical tensions heating up in Asia, while at the very same time, the central banks in the US and Japan are about to pull the global economy in totally opposite directions. And when you mix that conflict with already weak global growth, it's forcing everyone to ask the big question: where is it actually safe to put your money anymore?
Okay, so right at the center of the storm, you've got the U.S. Federal Reserve. Their decision this week is absolutely critical. But here's the twist. The real suspense isn't about what they're going to do. It's about what they're going to say after they do it.
And this slide right here just brilliantly illustrates that core tension. The market, it has already decided a rate cut is coming. It's already priced in. But the Fed, on the other hand, is sticking to its official, cautious, data-driven stance. And that gap, the space between what the market expects and what the Fed says, that's where all the volatility is hiding.
So, the crucial point to get is that this number itself isn't the real headline. This move is what we call easing policy. It just makes it cheaper to borrow money. The market totally expects it. The financial world has already factored it in. The real action starts the second after this decision gets announced.
The answer? It all comes down to Fed Chair Powell's press conference. Will he signal that more cuts are on the way, potentially unleashing a huge market rally? Or will he deliver a really cautious, wait-and-see kind of message that could trigger a sharp sell-off? His words, not the rate cut itself, are what will set the tone for global markets.
And just a quick but important note from us. While we're connecting the dots from our sources, please don't forget to subscribe, turn on notifications, and share and like our explainers. And remember, this is for informational purposes only. It is not investment advice. Thank you so much for joining us.
Now get this. While the U.S. is expected to ease its policy, a seismic shift is building on the other side of the world. Japan is on the verge of tightening. That means raising interest rates for the first time in decades. And honestly, it's a move that could be way more disruptive than anything the Fed does this week.
To understand why this is such a gigantic deal, you have to know about something called the carry trade. For years, big-time global investors have basically used Japan as a source of virtually free money. They borrow Japanese yen at almost zero interest and then use that cash to buy up stocks, bonds, and even crypto all over the world. It's been a cornerstone of global liquidity for a long, long time.
But if the Bank of Japan hikes rates, all of that cheap money has to rush back home. Investors will literally be forced to sell their global assets, stocks, bonds, you name it, just to pay back their yen-denominated loans. We're not talking about a small adjustment here. This is a potential global fire sale that could suck liquidity out of markets everywhere and cause volatility to just spike.
So you've got this uncertainty from the Fed on one side and a potential liquidity shock from Japan on the other. In an environment like this, where do the really big players, I'm talking about central banks, turn for safety? Well, our sources all point to a classic answer: tangible assets, especially gold.
And believe me, this isn't just talk. We are seeing it in the data. According to one source, central banks snapped up a staggering 53 tons of physical gold in just 1 month. That is not a subtle move. That's a massive signal.
So what's driving this rush to gold? A huge part of it is this eroding faith in traditional safe havens. I mean, with U.S. government debt now ballooning to over $40 trillion, the whole idea of U.S. bonds being the ultimate risk-free asset is, well, it's really coming into question.
And who's leading this charge? Nations like China. For over a year, that's 13 straight months, the People's Bank of China has been systematically adding more and more gold to its holdings. This is a clear, strategic move to diversify away from the dollar and bolster its own reserves with a hard, tangible asset.
And look, this isn't just one analyst's opinion. When you look across our sources, a really powerful consensus emerges. Sellcoin sees all this central bank buying as a clear move away from the dollar. Shaheen views gold as the classic hedge against the recession he sees coming. And Kolchak describes the current environment as slippery, basically saying that gold and silver are the most dependable things to hold on to right now.
So we've seen the conflicting signals from the Fed, the hidden risk brewing in Japan, and the massive flight to gold. Let's pull all of this together and boil it down to the key takeaways you really need to understand as we head into this wild period.
Okay, if you remember anything, remember this. The world's major central banks are pulling the global economy in opposite directions. The quiet end of Japan's carry trade is this huge hidden risk lurking under the surface. And in response, the smart money, the central banks themselves, are hedging their bets with gold. It's a move our sources all agree is the key defensive play in this really uncertain landscape.
So, as all these powerful forces collide, we're left with a pretty profound question. We could be witnessing a reset of the global financial order, a move away from the policies that have defined the last few decades. The actions taken this week could very well write the first page of that next chapter, forcing all of us to reconsider what safety and value truly mean in the years to come.